Hi, everyone. This is your host, Ruffin Mitchner. Welcome back to The Future is Female. Today, I have a special guest, Meera Clark. She's a venture capitalist at Redpoint Ventures. She's a former investment banker. She's Forbes 30 under 30. She's a Kauffman Fellow, and the list goes on and on. But most importantly, she's a great friend. We go back all the way to day school days growing up in Charlotte, North Carolina together. I've learned so much from Meera over the years, and I'm so excited to have her on the show. So, without further ado, let's jump right in. Hi, Meera. Welcome to the show. So excited to have you. For our listeners, Meera and I go way, way back. We were just laughing about our Charlotte Country Day School days. We grew up in Charlotte together. So excited to have you on the show. Do you want to just start off by giving a little brief background on who you are and what you're up to?
Yeah, absolutely. And thanks again for having me, Ruffin. It's funny. I'm like, what would my first memory with you be? It was probably ballet in like third grade, which is insane. Yeah, so over 20 years ago at this point, which is making me feel incredibly old. But I guess in terms of kind of brief background on myself and my journey, having grown up in North Carolina, I actually came out to California for the first time for undergrad. So landed at Stanford, kind of with a lot of questions surrounding the direction that I wanted to go in. Began taking a bunch of classes that were candidly just interesting to me and ended up finding myself kind of gravitating towards a lot of the engineering oriented fields. So ended up majoring in management science and engineering at Stanford. While on campus, spent a bunch of time exploring the tech ecosystem and startup ecosystem, spent a summer working at an e-commerce startup backed by Andreessen, followed by a summer working in product at PayPal. And while I was sitting in these seats, I really had the question of where is this group going within the company? Where is this company going within this industry? Where is this industry going with in the next 5 years? And I didn't necessarily feel that me, as this lowly intern, was necessarily in a position to answer those questions. So that's what actually led me to make the pivot over to finance, where I've kind of been ever since. And so I started my career within finance at Morgan Stanley. So I joined as an intern the summer after my junior year and then rejoined full time post grad. At Morgan Stanley, I started out within sales and trading. So sitting within the equities division, but looking at both public equity and credit markets. So stocks, bonds, other fixed income instruments, you name it. Effectively looking at what are the disruptive trends in the markets today. If it is, the evolution of e-commerce, how do you trade that across asset classes? Whether it was looking at kind of mortgage-backed securities as it relates to kind of commercial like class A through C malls on the fixed income side, or looking at Shopify stock, for example, within equities. And so loved that role, but continue to have this itch that I wanted to be closer to where the action was, which in my mind was really working with and touching the companies themselves. And so from the trading floor, made the move over to banking. So spent a year in Morgan Stanley's tech banking practice out here on the West Coast, advising kind of consumer internet and software businesses on anything from private placements and IPOs to convertible debt offerings and M&A alternatives. And so that's really where I began building out my network more so within tech specifically, and my love for the category as a whole. From that group, I landed in my last seat at Morgan Stanley. Again, a little bit of a winding journey, but landed in the Multicultural Innovation Lab, which is the firm's accelerator investing off balance sheet in women and multicultural founders. Generally, these investments were kind of pre-seed, seed stage bets, very early. And then we would work with those founders by bringing them in-house for about a 6-month program, and would work with them on really scaling their businesses. Having kind of gotten that look and feel for the venture side of things at MS, I realized I really wanted to go deeper and deeper. And so kind of took the plunge off the deep end and moved to the side of institutional investing, joining my first, let's say, more traditional venture capital fund in 2019, when I joined Obvious Ventures. And so briefly on Obvious, Obvious is a mission-driven venture capital fund and B Corp that was actually started by Ev Williams, so founder of Blogger, Twitter, and Medium. At Obvious, I spent my time looking at anything across the health and wellness ecosystem. So think anything from a physical product like Ollie the gummy vitamins or Beyond Meat, all the way over to some of the risk-bearing or more healthcare-oriented platforms. Think someone like Devoted Health or New Life Health in the psychedelic space, if we want to talk about some of the more fun plays. Post 3 years at Obvious, though, I then made the move over to my now home and hopefully forever home, Redpoint, in April of last year, which was certainly an interesting time for the markets as it relates to a lot of venture land falling off a cliff, which I can certainly unpack later. But at Redpoint, I sit within our early stage practice. So I look at seed through Series B consumer companies, as well as spending a little bit of time kind of expanding into vertical SaaS and climate. But yeah, it's been kind of a dream to be here. I feel like I pinch myself every morning that I get to wake up and get to go have some fun.
Amazing. Can you tell us a little bit about how it's differed working at a company, a big company like Morgan Stanley in investment banking to being at a smaller fund? And what did you like about that and what did you dislike about those experiences?
Yeah, I feel like there's a little bit of like the tail wagging the dog or the dog wagging the tail, whatever the saying is. I think at Morgan Stanley, in many ways, I felt very fortunate to learn there because I was taught so many best practices and there was a lot of processes in place. And so, in terms of, yeah, building good habits, I think, banks, consulting firms, you name it, are incredible. At times, they're annoying. At times, you don't want to do it. And I think I feel like I almost had this like cold water splash in my face when I joined Obvious because there was not established folder hygiene in terms of how you store files internally. It was kind of, choose your own adventure, every man for themselves. And so for me, that's actually been quite nice, both at Obvious and at Redpoint, because I've been able to come in and kind of put in place some of these practices based on what is not overly burdensome. It's, quite practical in orientation, but that does provide a little bit more structure or a little bit more scalability. Because I think in many ways, a fund, at least like the two that I've worked at, are like startups. Even if these funds have been around for, 5 years or 20 years, in Redpoint's case, the teams have remained like lean. And we very much do, let's say as little as possible to get to a sufficient answer, which is really about time management and it being as efficient as possible. And so I think from that perspective, that was certainly a shift. One, two, I think early on, I probably took it for granted, but I had a lot of resources and a lot of people to ask questions or get answers from. At Morgan Stanley, that bank has, call it 50, 55,000 employees with experts around the world that know anything and everything about specific economies, markets, products, you name it. And coming to a fund, you're kind of expected to have the answers or be the expert. And so I think switching from kind of to someone else to looking internally has also been a little bit of an adjustment, and also an opportunity to leverage my network or my learnings over the years to kind of own that answer or be willing to say, you know what, I don't know, and that's okay. I would say, third, I think has been, and maybe I'll round things out here because I could probably go on forever because they're so different, but I think third has been kind of the risk appetite and the autonomy or agency. Morgan Stanley, obviously being a highly regulated financial institution, we had to come at things with a place of 100% certainty or kind of have the legalese in place before anything went out the door. Where at Redpoint and at Obvious, I'm in a position with a lot of agency and autonomy and the opportunity to experiment or iterate, which has been great. It's daunting because you definitely fall on your face sometimes and fail, but I think you're only learning if, you're getting a few bruises or scrapes along the way. And so I think that for me has also been a daunting shift, but very much a welcome shift between the two.
Can you talk a little bit more about your decision from moving from the innovation lab accelerator model with Morgan Stanley to a more traditional fund?
Yeah, happy to. I guess there were a few things that, I began noticing during, my last few months at Morgan Stanley. And one was this extreme sense of FOMO as it related to the companies. I think by nature of the accelerator model, you're investing once a year or twice a year in a very specific stage of companies as it relates to this 3-month period of their life cycle. And I was realizing there were awesome companies that we were missing because they were too early for us one year, too late for us next year. And I really didn't want to miss them. So that was one element of it. Two is when I was working in the multicultural innovation lab, I was really early in my investing career and I didn't quite have that judgment honed yet. And I probably still don't have it. It's certainly a journey that I think we each hopefully make a little bit of progress on every day. But to be able to look at companies every day of the year versus a month of the year, I think dramatically accelerates your pattern recognition as an investor, you're able to really pick up on themes in terms of what was hot in January that's not hot in March, or vice versa, and begin to, ask and maybe develop some semblance of an answer surrounding why. And so I really wanted to be in a seat where I was getting those data points consistently versus intermittently. And then finally, I think, we talk a lot about this at Redpoint with founders in terms of finding the right fund for you. Not every investment structure is great for every founder. I think it can be very stage specific. And so I was really eager to move to, a fund with Obvious that was tailor-made to support, companies at the earliest stages of, formation as it relates to helping them with early hires, to having the network for early customer introductions, which I think is something that's really special about venture capital funds. And that's why, there are certainly crossover funds, but that's why a lot of founders, at least, choose to partner with a VC fund versus a hedge fund or a crossover fund for their earliest rounds. And so, yeah, for me, it was really more of, again, having this like consistent desire of best practices and really hoping that I was getting kind of the right information in the earliest innings of me developing these muscles so that, once I was ready to sprint, I was at least sprinting in remotely the right direction.
Cool. And so then you moved to Obvious and then Redpoint. Tell us a little bit more about each of the fund's investment strategies, more examples of the types of companies you are investing in.
Yes, absolutely. So as I mentioned with Obvious is a B Corp. And so every investment that we made had was mission oriented, but I would say had this like underlying question of how does this make the world a better place? The fund itself is backed by, your typical institutional LPs, pensions, endowments, nonprofits. And so we were investing for financial returns, but, again, consistently asking this mission question. I think for me, this was very much the dream. I think it, was a nice transition to the work I was doing at MS from a diversity perspective, but even going wider as it relates to kind of the broader ESG mandate. So for me, I think that was really powerful and really motivating in terms of, having the privilege of working with the companies that I wish existed. In terms of where that led me to spend my time, Obvious as a fund had three separate, let's say, themes, if you will: sustainable systems. So thinking about kind of reinventing the highest emission industries, industrials, manufacturing, transportation, you name it. Healthy living, so empowering consumers to live healthier lives, whether that was through kind of food or CPG brands, or kind of on the more traditional healthcare or even computational biology side of things. And then finally, this idea of what we called people power, but really the idea of economic empowerment, kind of workforce empowerment tools, fintech solutions, et cetera, et cetera. And so I really gravitated towards, let's say, more of like the human-centered companies, typically those empowering consumers to live their best lives, either personally through kind of like the health and wellness angle, or professionally, whether that was, labor marketplaces or kind of some of the fintech solutions that they had at their fingertips. I was there through, the early days of the pandemic and at least the beginnings of the COVID recovery process. And so a lot of our activity was within kind of healthcare specifically, and thinking about this idea of holistic health, whether it was sleep, mental health through psychedelic interventions, or whatever else. And so that was kind of where we spent time at Obvious. I would say at Redpoint, it is complementary and there's definitely Venn diagram overlap, but it's also a little bit different. I was brought into Redpoint, as I mentioned, as part of the fund's early stage team. So Redpoint as a fund has two separate strategies. Our early stage team is investing out of a $650 million fund. We write checks kind of in the $1 to $20 million range. Sweet spot's probably closer to 3 to 15. And then our growth fund is a $750 million fund that writes checks kind of 20 million and above, Series B and beyond, mostly Series Bs and Cs. Across the two strategies, thematically, it's fairly consistent. And so I would say, 75% of Redpoint deals are enterprise and infrastructure. So think, Snowflake, HashiCorp, those sorts of businesses. And they've done fantastically well for Redpoint, but there's also that 25% that is not that. And that is kind of where I spend time. So I was brought in to continue building out a lot of our work within consumer. Over the years, looking very far back, I think Redpoint had the privilege of partnering with some truly iconic companies. Think a Netflix or a Snowflake, or sorry, Sonos, on the consumer side. Certainly brands that I think people have heard of or have in their homes. More recently, I think we've certainly seen a resurgence with the likes of Whatnot or Guild Education, those sorts of platforms. But I was brought in to kind of help expand our bandwidth on that side and help with brand building there. I think similar to what you do in so many ways with kind of the podcast and what you're doing on TikTok. In terms of where we're spending time, I think it's been an interesting inflection, right? In terms of people's spending power is dramatically coming down, whether it's because their savings are down, they're losing their jobs if they're a tech worker, inflation's running high, what have you. And so I think we're seeing this like renewed emphasis on cost savings or like cost consciousness, one. Two, coming out of the pandemic, we've seen a huge emphasis on values from consumers. And so, for us, this is kind of, let's say, manifesting itself in two ways. One is this like really strong pull towards authenticity, more meaningful communities versus just like mass market everything and kind of more of a homogenous experience of the world. And then two is this alignment with one's like environmental priorities and this really strong emphasis on climate. And so climate is interesting because it's a rabbit hole that, Obvious was very focused on. We made a bunch of really bets in the category. More on the hardware, deep tech side, less in my orbit, but I at least had kind of courtside seats to what was happening there. And then when I came into Redpoint, it kind of emerged as this very clear gap or opportunity, if you will, in terms of building out our practice here, our theses, what have you. And so I've been spending a bunch of time within climate, specifically both on the B2C side as well as some of these B2B SaaS solutions. And so, yeah, I would say where we spend time on a day-to-day honestly differs wildly month to month in terms of what's happening in the markets, but at least thematically, that's kind of where I am most focused within our portfolio.
Amazing. That keeps things very interesting. Where and how are you staying up to date on all these trends? Like, do you have great sources that you like to read and follow, or is it just a matter of like speaking with different people in the spaces?
Yeah. So it's interesting. I feel like when I was moving into investing, I was dead set on doing consumer, and everyone told me I was absolutely crazy because all the returns were in enterprise, and they're not entirely wrong. But I really wanted to be in a space where I felt like I had a competitive advantage or I had a reason that I could possibly win a deal or have a deeper insight. And to me, that came down to this idea that I wanted to be spending my Tuesdays the same way that I spend my Saturdays in terms of the topics I'm reading about, talking about, thinking about, what have you. And so, all of the themes I've spent time on, both at Obvious and at Redpoint, are areas I am deeply, deeply interested in, and really enjoy going deeper and deeper down the rabbit hole. And so to your question on kind of where do I get this information, honestly, the answer is everywhere. I think there are a bunch of great podcasts that I listen to consistently, whether they're climate specific, investing focused, consumer trends focused, you name it. There are a bunch of newsletters that I read consistently, whether it's blogs from other investors or other kind of thought leaders in the space, or just kind of your general tech newsletters that's keeping you up to date on trends or what have you. And then a lot of learning I do from the people around me. That's a mix of learning from the team at Redpoint. I think it's a very, very curious, but also very low ego group. And so, we'll spend hours as a team talking through what are the use cases of generative AI in consumer? Like, are these investable? Are they not? Do we care? As well as with other kind of investors or founders in the broader VC ecosystem. And so whether that's, doing biweekly calls with them or going to dinner with them or, simply trading notes or voice memos, like there's a lot of information trading because again, I think one of the best and most challenging things about, early stage investing is that we are hypothesizing on the future. These are opinions, not facts, or predictions, not necessarily realities. And so I think this, back and forth discourse, again, everyone's not going to be right. We're probably going to be wrong more than we're right, and that's okay. But getting as many data points as possible to inform your own worldview is super rewarding and I think pretty important.
Amazing. So you're obviously looking at a lot of themes and trends, but when it comes to like specific deals, how do you and your team go about like thinking through, is this a good investment? And like, what specifically are some things you're looking for? And then on the flip side, how should founders and entrepreneurs think about, is this the right investor?
Yeah. So the unhelpful answer is that it's so stage dependent or company dependent, but just to distill it down to maybe more a slightly broader generalizations, I think at the end of the day for us, we are thinking about team, TAM, and then potential terminal value for this business. And I think there's a lot that goes into that. From a team perspective, I think, there are a few things that we care a lot about. Redpoint is very, very culture focused, as was obvious. And so we want to partner with humans that we want to spend the next, 12 to 14 years with, and individuals with high integrity and who we feel like, live, speak, breathe, the language of their target market or their consumer. So we think a lot about the founders, are they going to be able to fundraise well? Are they going to be able to hire well? Are they going to be able to motivate a team when things are tough? And so founder for us is huge. I would say the other thing as it relates to that founder, given the fact that in so many ways, startups are a race against the clock or a race against your next funding round, is this question of build velocity and how quickly are they able to ship, iterate, pivot, you name it. And so indications either through our conversations with them from their prior experience or what have you, surrounding kind of who they are as a human, what their build velocity is really important to us, one. Two is what is the market they're going after? I think there's so many questions related to market. One is related to the size of the market. Is it large enough to really result in a venture scale outcome? Is the margin profile strong enough for this to really be interesting for future investors? Is there enough greenfield opportunity or enough fragmentation that, a nobody can come in and own this space that has maybe been around forever, or maybe it's a new market that's being created because of regulatory change or what have you? We think a lot about the size as well as the health of the ecosystem that they're playing in. And then finally, on that terminal value point, which I think is becoming increasingly important to investors given kind of the ongoing macro mayhem, we really think about it in two ways. One, given our fund size, so we're investing out of a $650 million fund, for an investment to really make sense for us, we need to believe that these can be, call it $2 to $5 billion outcomes or more, maybe even $3 to $5 billion outcomes or more, with valuations kind of across public markets and even late stage private markets plummeting. From a multiples perspective, we really need to believe that these companies can get to, 200 million, 300 million in revenue, while also not assuming that they own their entire markets, assuming like very conservative or reasonable penetration rates. And so we're really thinking about what does it take to get there? Like, do we believe this company can get to that? Because there are plenty of amazing products we all use every day that don't monetize. And like, not every company needs to be venture backed. Not every company needs to reach 300 million in revenue, but we're asking the question of, can this company be one of those? Because there aren't that many, particularly within kind of consumer vertical SaaS. That's one element. The other element is because the fundraising environment has gotten so much more challenging, there's a big question of, okay, even if the terminal potential exists, like, can you even get there? And that comes down to, what does a successful next round look like for you? And do we think this round is going to be enough capital to get there? Do we think there's enough clarity to get there? Do we think you're aiming for the right goalposts? Because in many ways, investors have frustratingly been moving those goalposts for founders, every week or every month over the past couple of quarters as market conditions have changed. And so those are really kind of the three buckets that we're probably most focused on. Again, I would say the weighting of each bucket varies a little bit company to company or stage specific, but at the end of the day, those are probably like the three questions most top of mind for us.
Very helpful. A few follow-up questions. One, what is a reasonable market penetration for it to make sense as an investment? And then two, do you help your founders like build out how they're going to reach milestones to raise that next round of funding? And then just generally, how else does your team work with entrepreneurs and support your portfolio companies?
My favorite question. As it relates to reasonable market penetration, I would say from a quote unquote conservative modeling perspective, we're typically looking at it as a 1%, 2.5%, 5% penetration rate. You're not expecting the industry to be flipped wildly on its head if you're making those assumptions. And if you're operating in a large enough market, you can actually build a really big business, only assuming 5% penetration, which, to be fair, that's still a lot. That's 1 in 20 people. You know what I mean? On the flip side, what's interesting, both with vertical SaaS and some very specific categories of consumer, search being the most obvious, some of these really are winner take all markets. Microsoft published some interesting slides yesterday as it relates to kind of their partnership with OpenAI and what they're doing on the search side, showing, Google's ownership of search. And I think today, I don't have the number off the top of my head, but it's between 80 and 90% of searches on Google. As of 2010, it was 90, which is wild when you're talking about, a market that's hundreds of billions of dollars in size. And so there certainly are anomalies where you see 50%, 60%, but that's not something that an investor will typically assume at the point of underwriting. To your question on how we help founders, yes, we definitely are talking with them about what those milestones look like, because while they have probably so many more superpowers than us, one of the positions of advantage we have is that we are talking to investors all day and we are seeing companies all day. And so we just have a lot of data points surrounding the health of the market, what the market's looking for. So we certainly relay those to our founders and work with them, on a weekly or, if I have a board seat, probably like a bi-weekly basis. We're spending 30 minutes to an hour together talking through company updates, strategy shifts. How are we thinking about our 1 month, 6 month, 12-month plan? So we definitely work with them on that. We really, in many ways, think of ourselves as an extension of their team there on more than anything else. And so they're texting us, Slacking us, whatever it is. On the flip side, we also, kind of think of ourselves as the API into the broader Redpoint organization. And so we have a founder experience team, which was actually one of the big reasons I joined Redpoint, because I was such a fan of their work. But we have a founder experience team that's as large as our early stage investment team. And they're focused on anything from hiring. We have a handful of in-house recruiters, customer introductions for our B2B businesses, marketing, communications, events, community. And so, while I kind of sort of know how to set up my Substack page, there are folks on our team that are far better at marketing than I will ever be. And so being able to kind of say to a founder when I don't know, hey, I don't know, but let me pass you off to my partner who's an expert at this, it feels like such a gift and something that's really valued by them. And so we've really thought about fortifying that team with kind of what are the 5 elements that make companies in year 1 through 3 or 0 through 4 successful, and giving them, yes, a little bit more juice as they are still in the process of scaling out their teams internally.
Amazing. So I know Redpoint is on TikTok, I believe YouTube, Instagram. I understand there's, big media presence. What is the strategy there? And why is Redpoint building out those channels?
Yeah. So Redpoint, I would say, has built out a whole host of channels. And I think we have a handful of different, let's say, content strategies if we extend it to Substack as well. Some of them, particularly the work a lot of us have done on Substack, is a little bit more thesis driven or like informative in terms of our views, what we're seeing in the market. But I would say with, some of the podcasts, but like in particular with a lot of our short form video, that I think on the surface looks a lot more entertaining than informative per se. We're really using these as an opportunity for founders, operators, other investors to get to know us. I think so much of partnering with a company is having this deep trust of, I want to spend the next, 10 to 14 years in the trenches with you. And so through those, diligence processes, we're asking a lot about them. Like, who are you? What do you care about? What do you stand for? What have you done? And, I think sometimes founders are a little bit shocked through that process that they don't get to know us that well. And so we really want to ensure that they get a flavor for kind of who we are, like what our values are, the idea that we don't take ourselves very seriously, the fact that we're like playful, collaborative, a little bit silly at times. And so, we really think of it somewhat similarly to the way a consumer company would think about it, right? I don't know the exact numbers. You probably know better than I do because you're deeper in this space. But if you think about the typical consumer company, it takes whatever, let's say 7 to 9 touch points to actually drive conversion. And so you see something on your friend's Instagram profile, you get the Instagram ad, it pops up while you're, reading the news as, an ad on a web page, you see it a few more times and then bam, you decide today's the day I'm going to buy that top. I think similarly, we really want to have, a variety of touch points with founders, whether it's seeing a funny meme on TikTok to coming to one of our dinners and getting to know us up close and personally, to reading our thoughts on the space and feeling like we actually understand their category, to whatever else. And so we really think about it as like a diversified touch point, and a little bit more of like a mass reach play more than anything else. And it's a strategy, I think, like all good content strategies, we're continuing to test and iterate and refine. But it's certainly been a fun one, I think, for a lot of us to at least admire, because Rashad, my partner that really spearheads all of those efforts, is probably a million times funnier than I will ever be, and a million times cooler than I will ever be. But I think that's the great thing about being on a team also, is that you can have people that, have these superpowers that you don't have.
Very, very smart. His videos are hilarious. Like they always kill me. And yeah, the Redpoint TikTok, I feel like, and the other channels just make your team so approachable. So I think it's genius what you're doing.
Well, it means a lot.
Yeah. So now would love to know a little bit more about your own personal angel investing. I think that can
Yeah.
be very intimidating for people that like don't work in venture. So would love to hear just more about your general like process to making these investments. Like how did you personally dive in to start? And any kind of advice you could give for people that maybe don't work in venture but would like to start angel investing.
Absolutely. And so I started angel investing maybe 3 or 4 years ago. I actually was already in a quote unquote institutional investing seat, because candidly, like before that, it seemed really intimidating and I didn't know how to do it. I think there's a lot of amazing platforms like AngelList or what have you that are making it easier, but I still think there's a lot of questions surrounding how do I get into it, or what does that look like? I think the most important perception to kind of debunk is the fact that you need to be super rich to angel invest, or you need to have a lot of disposable income. Sure, there are the accredited investor requirements in terms of making over $200,000 a year or having certain series licensees, but I guess SEC has been somewhat good, or at least is trying to expand those requirements to make them more inclusive. And so I think a lot more people do qualify than maybe realize it. So then it comes to the question of like, how much are you willing to invest? And, I used to think you have to invest $20,000 in a company, or like some amount of money that I was not in a position to risk. And what I found over time is that I have angel investments through syndicates that are as small as $500. And then I obviously have investments that are much larger in terms of being core positions for me. And so I think with a lot of these, if you go through a syndicate, you can write a much smaller check. And even with founders, if you ask, I think a lot of founders are way more receptive than you would expect. And worst case scenario, they say no, which is not a bad outcome, because it's the same outcome you would have had if you had never asked. In terms of kind of how I've approached it, I think there's maybe like a few things to keep in mind. One is the mindset that you go into it with. And that is not a mindset of making money, I think, for most people. It is a mindset of, I'm doing this to learn. And that for me has been incredibly valuable, whether it's learn or, be able to share my learnings with I invested in this company, here's, all the insights I derived from it. I think my angel investing portfolio was actually really helpful when I was interviewing at Redpoint and building a relationship with the team, because I could speak to areas of interest that were maybe outside of the obvious portfolio, but where I had interest or expertise and had therefore kind of expressed a point of view through establishing a position. So I would definitely think about it more from a learning perspective, particularly given the fact that whatever it is, 90%, some crazy percent of venture investments certainly go to zero, and call it 8, 10, 12 years to ever see a return in terms of actual money in the bank versus simply a paper return. And so it is more of, a learning process than anything else. In terms of how I've thought about sourcing investments or like deciding when to take that plunge, it's been a mix. Some of it has been deals I've seen through, obvious or, more from a traditional investing seat. And we were not able to get there, whether it was on valuation or ownership, or it was a little bit riskier or a little bit too early for my fund. And so I've, decided to go out on my own and do it as a personal check. But I would say a lot of my angel investments have actually been in people that I know. I think I had the extreme privilege in investing in my little from my sorority, as well as my roommate from New York, when they kind of raised a really, really competitive seed round. I guess that was 2 years ago. That was led, by a tier one fund in many ways, but that was one where I had so much conviction in these individuals. It was obviously, a bonus that they were building in a space that I was excited about and deeply cared about. It's a women's health company. But more than anything else, like that was a team bet. And so I think being able to, invest in people that you've known for years and you've seen operate and grow or what have you, like in many ways, that's one of the most fun parts of the job. The last thing I would say about angel investing is it can be a little bit lonely or a little bit scary to begin exploring. And so I think a great way to dip your toe in the water is to do it with friends, whether that's finding an existing syndicate on AngelList, or starting your own. I'm a part of a syndicate, which is, I'm going to get the number wrong, but it's probably like 20 to 30 women Stanford alums who were all loosely friends in college. I think we probably spanned 4 or 5 grades. And a handful of them got together and said, hey, we're going to make this happen. We're going to source deals together. We're going to do deals together. We're going to help companies together because we have, diverse networks, diverse skill sets, and we're going to be doing this better together. And so what's been awesome about that is that, one, it's fun to, spend time with these folks. 2, I feel way smarter being able to bounce ideas off of them. And 3, it has brought down the check size pretty considerably because, while I might be committing to investing X over the life of the fund or X on an annual basis, each individual investment is a little bit smaller. And so it, in some ways smooths out the risk profile at least a little bit.
Amazing. One, can you share the names of those companies that you mentioned earlier? And 2, can you just generally tell us how a syndicate works? Like, does someone lead it? Is there like a voting system to make the investments? Like, would love to know more about that.
Absolutely. Yeah, the company that I was alluding to earlier is a company called Evie that I would highly recommend folks check out, in particular their TikTok, because they are similarly highly entertaining on all of the social media channels. But Evie started as a platform focused on the vaginal microbiome, so at-home testing of vaginal microbiome health, and then making, data-informed recommendations on how to improve that. If you get UTIs a lot, do you want to try this or that? If you have, BV or some of these other highly uncomfortable, but actually fairly prevalent conditions, how do you think about mitigating those symptoms? They more recently have expanded out to be into a broader telehealth platform as it relates to pairing you with kind of licensed clinicians to rather write scripts or make recommendations on a lot of those. I won't say too much about, the ambitions under wraps, but I would say, pretty broad dreams as it relates to the amount of ground they want to cover across women's health. So really excited about that one. With the work we're doing with Jane Cap, the syndicate I'm a part of, I would say a lot of the investments are not disclosed. One that's also in the women's health space that I think has gotten some notable buzz or attention is a company called Hey Jane. Their wedge was at-home access to abortion care, and kind of now are expanding into that broader care dynamic, not just kind of the, initial treatment, I guess is the right word. I don't even know, but thinking about anything from postpartum counseling to whatever else, birth control, kind of preconception stuff. And so really, really phenomenal founders and great business that we're really excited about on that front. To your question on kind of how do these things work, my unhelpful answer is I don't even really know. I think they kind of vary syndicate to syndicate. As it relates to Jane Cap specifically, we have, I want to say it's about 5 managers who definitely bear more responsibility, have taken a much more active leadership role within the organization, whether it's setting up our legal structure. We are very fortunate to have a lawyer as part of our syndicate, which has helped to keep costs low. But yeah, they've kind of set up the org, and then there are, call it 20 or so quote unquote investors. And so we can contribute deals, we'll vote on deals, we'll help with diligence if we have expertise in that area, but not every investor is kind of actively engaged on every deal. I think that syndicate, for example, does vote. And I think some syndicates do, some syndicates don't. I think every syndicate has a different threshold for what a yes vote really means, whether it's, 50%, 100%, somewhere in between. And so, yeah, I think it really depends on kind of the profile of where they're investing, stage-wise, sector-wise, if you will. There are also a lot of rolling funds, though. And so I think those can be an even easier entry point in many ways, because with JaneCap, we kind of established on X date of X year, we are starting this. And so we have a set amount of capital that we're hoping to deploy before we all reassess what's the plan for V2. Whereas with rolling funds, it's a little bit more, I want to do this deal, I don't want to do the next deal, I don't have capital to invest this year, but count me in the following year. And so I think for a lot of folks that want it more from like an experimental, kind of dipping their toe in the water as it relates to angel investing, I think rolling funds can be a great option. And a lot of those are actually public and available on AngelList for folks to check out, which is awesome.
Amazing. In the interest of time, this has been awesome. Can you share where people can get in touch with you, get in touch with Redpoint, and then I'll have one final question.
Yes. Easiest places to find me, I even need to look up, what is my Substack page? It is consciousconsumer.substack.com. That's where we publish a lot of our thoughts across both consumer and climate. And then I would say on Twitter, I'm on, not every day, a lot of days. I'm at ITS Meera Clark, so MEERA Clark, CLARK. At It's Meera Clark, and then Redpoint's very active on Twitter as well, and we repost at least the highlights from TikTok onto Twitter, and so you can either find us on TikTok with the official Redpoint TikTok page, or on Twitter with the official Redpoint Twitter page.
Perfect. And then finally, my favorite question that I always end with, can you share a female founder, investor, or leader that inspires you, and a little bit about why?
Yes. I'm going to go with a slightly hokey answer, and I'm going to give a shout out to Annie Cadeby, who's one of the managing directors at Redpoint. Annie is a woman that I met at a conference, gosh, it must be something like 5 years ago. And I had heard her name a bunch throughout the years. She was this legendary former Stanford Theta that was crushing life and doing all the things. And so post hearing her on a panel, I kind of went up and introduced myself. And that was, let's say, the beginning of a beautiful friendship. And so over the years, Annie and I, kept in touch, did podcasts together, traded notes, and I looked up to her in so many ways. I think she is a wonderful human, first and foremost, whether that's, being an amazing friend to people, wife, mom, all the things, but is also a really well-known investor across the consumer landscape. And I think got started in this industry when there candidly weren't a bunch of women, and did it in a way that was not, compromising her values or hiding who she was as a human. It was very much kind of, here I am Annie, here's what I'm excited about, and would love to partner if you feel the same way, which I think has served her really well over the years, partnering with the likes of a DoorDash or ClassPass or a Mirror or a Guild or a lot of these companies I think folks have heard about. Annie, as she and I got to know each other better and better, kind of came knocking at one point with the, I hope you're really happy, but I've always dreamed about working together, which of course was like my deep-seated greatest dream ever. Do you want to maybe talk about what working at Redpoint could look like? And so Annie was a huge part of me coming over to Redpoint. And I think now, almost a year in, having a colleague that looks like me, kind of comes from a similar background as me in terms of being in my sorority or doing the same things as me when she was 22 and I was 22. It's really nice, I think, in a world where it can be a little bit intimidating to find those mentors or those examples that you feel like really connect with who you are and the direction that you're headed in. And so Annie has been, an amazing mentor and sponsor to me at Redpoint, and has made this organization feel a lot more like home.
Major shout out to Annie. She sounds amazing.
She's going to be mortified that I said all of this, but.
Awesome. Well, thank you so much for joining the show. This has been so fun to catch up and just been awesome.
Thank you for having me, and hopefully we can do it again soon.
Thank you so much for listening to this episode of the Future is Female podcast. If you're a fan of the show, make sure to subscribe, rate, and leave us a review. See you next time.